According to supply managers in the 9 Mid-America states, how is the economy performing?
According to Creighton's February survey of purchasing managers, supply managers in manufacturing, it's looking much better. Well, much better is too strong a word. It's up for the month. February's number was 52, and a reading of above 50 is growth. 50 is growth neutral. 52 is up from January's 51.1, and of course this is moving in the right direction. It's the highest level since April of 2024. So the manufacturing sector is looking better, but not significantly better. But this is moving definitely in the right direction. We ask about tariffs, and 26% of the expect tariffs to be the greatest 2025 challenge. So that's a real issue. So all these positive numbers could be overturned by any change in tariff policies which involve retaliation. For example, we could have retaliation from China, of course, Canada, and again Mexico, the three that we're talking about mostly about. And 25% indicated that the number one challenge was finding and hiring qualified workers. So that's much what we've seen in this part of the country for a long time, and we'll continue to see that as being an issue going forward. Now let me bring up the, you'll see the graph here. In beautiful Creighton blue there, you'll see that 52.0, and as you can tell there, it's a pretty good reading. It's moving in, again, right, trending upward, I would call it, but not at a very, very fast pace, but nonetheless up. This morning, later on this morning, we'll see the national number, which will come out, and I expect the national number to be also up for the month, but not briskly. Again, we're seeing things moving in the right direction, but not fast enough to get real excited about, but it's better than being down.
What were the hiring trends?
Hiring was up for the month. The number was, February was 51.2, which is up from January's 51.1. And so this is the first time in a while we've had 2 consecutive months of readings above growth neutral. That's good. We're probably talking about still, in terms of the manufacturing sector nationwide, we're down about 100,000 jobs. For the region, we're down about 8,000 jobs. So it's still not recovered yet from the overall slowdown in manufacturing. And the big issue, again, going forward is going to be tariffs. Tariffs, tariffs, tariffs. And depending on how the president and his team negotiate this is going to be very important, particularly for agriculture and manufacturing. Of course, this is our manufacturing survey of supply managers.
What inflation trends are you noticing?
Inflation, again, is on the upward trend. We're seeing that number, the price gauge rose to 63.2. And again, all these indices range between 0 and 100, with 50 being growth neutral. 63.2, and that's up from January's 62.0. So not a big jump, but a concerning jump. And we're seeing that at the national level. The CPIs have been trending up, the consumer price indices. The wholesale price index nationwide was up as well. We're seeing that, for example, on the annualized, the last 3 months for the CPI, 4.8%. That's much, much too strong to be confident. Now the Fed's facing, unfortunately, a slowdown. At the same time, prices are increasing, particularly on certain products. Then when you look at the PPI, that one's up about 3.6%. That's the last 3 months annualized, and that's again too strong. The Fed wants around 2 percentage points, and they're not getting it right now. And not only are they not getting the 2%, it's moving upward again in the wrong direction. Inflation remains the Fed's one of their targets, their mandates, is to keep inflation at, say, a 2% level with pretty good employment growth. They're getting the employment growth right now, but there are even some questions there. On average, and this is very important, on average we ask the purchasing managers, what about how tariffs will affect prices for inputs that you purchase? On average, 9.6% increase. Now that's a real concern, pushing up prices. Again, tariffs, and we're talking about retaliation there, of course, but also on increases on the imported goods, increasing those prices of those goods coming in from other nations, of course.
What is the economic outlook?
The outlook is much. I was going to say much better, but it's better, and it's looking better for manufacturing. I think the U.S. manufacturing sector is looking somewhat better. The regional Mid-America is looking somewhat better, but again, I can't emphasize it enough that tariffs are going to be the big issue going forward. And again, a lot to do with, for supply managers, you're talking about increasing the purchasing prices of goods, products they purchase from abroad, but also you're talking about retaliation for sales abroad. That's a big issue. I expect the Fed to hold on interest rates. They meet again March 18th and 19th. No move at this point in time. But these are subject to really some strong undercurrents right now. I'll call it volatility, real volatile out there right now. For example, Bitcoin's now moved a low $80,000 for the Bitcoin. That's up from $107,000. That's telling us something. Gold prices are up, almost breaking across the $3,000 an ounce level. I think it will break that in maybe not this month of March, but I think we're going to see that in the coming months. Higher gold prices. We're going to see and that's because of two things. One is inflation. The second is the safe haven buy. So when there's so much concern out there, volatility, and you have those individuals abandoning Bitcoin, maybe moving to gold, that we're seeing that right now. So keep an eye on that. Keep an eye on the Federal Reserve's balance sheet. They've indicated they're going to go soft on the balance sheet, meaning they were in the mood, it was called quantitative tightening, which was putting upward pressure on long-term interest rates. And of course, that means mortgage rates. Mortgage rates are coming down. I expect them to come down some more. So keep an eye on it. Mortgage rates are still high by historical standards. Historical standards meaning since 2000, I'm speaking of 6.7 to 6.8%. That's what we're talking about. Inflation for quarter one is going to be much too high. Well, I should say much too high. It's going to be higher than the Fed wants. It's going to be, when you annualize it, it's going to be close to 3 percentage points. And also, just looking forward, long-term interest rates, I expect those to move somewhat lower, but there's going to be a bottoming out there. All right, maybe that would be a topping out. They're going to move down. Probably we're going to see mortgage rates move down to maybe a 6 3/4 on the 30-year mortgage rate. So keep an eye on the bond market. That'll tell you more than Ernie Goss or any economist can tell you. The 10-year yield has moved down from what was, say, 4.8%, moved down to 4.2%. That's a pretty big move, about 60 basis points, big move downward. Why? One is it inflation coming down? To some degree, inflation's, at least investors are expecting it to come down, inflation, but also concerned about the economy slowing down. So again, the big thing to keep an eye on is that yield. The gap between the 10-year Treasury and the junk bond rate, that's way too narrow. Should be much higher than that. What that's telling you is investors are too giddy, in my judgment, meaning they're too optimistic. So they think that the junk bond market is a safe place to be. I'd say no. The yields are going to go up, meaning your bond prices are going to come down on the junk bond rate. And on the flip side, 10-year yield is coming down, so that spread is probably going to widen, which is not a bad thing going forward. Again, keep an eye on the national ISM reading, which comes out later on this morning. I expect it to be up in the 52 to 53, much like ours, and that's better than what we saw, say, 3 or 4 months ago, moving in the right direction. Look at the price of a barrel of oil coming down. Now it's broken below $70 a barrel. That's good news. Natural gas prices still moving higher. That's a concern, but Canada is going to be our friend there. We're going to see some more drilling, more natural gas coming out of Canada. Price per million BTUs It's going to move in the right direction. Right now we're dealing with prices are too high and they're moving higher, but I expect it to move lower after a couple of more months. Listen carefully to what the members of the FOMC, the Federal Open Market Committee, what do they say? What are their projections? Particularly Waller, particularly Powell, of course. Now Powell doesn't speak as much as Waller does. Waller would be a person to keep an eye, listen to carefully. And junk bond yields, as I said. Watch the price of gold. Wow, it's moving in a range right now. I'd call it sideways. I expect it to move north of 3,000. Probably move north $3,000 to $3,100 per ounce. It's going to move in that range, but I expect it long term to break out of that range, moving up maybe toward 4,000, but that's going to take some time. That's not going to be anytime real soon. So that's it for our survey results here from Creighton University in beautiful downtown Omaha, Nebraska. Ernie Goss here for Creighton University. And between now and next month, the first business day of the month of April, may your economic cups run over between now and then. Thank you.